Hello everybody, welcome back. So on this video it's just going to be a brief one about the trading bot grids. I get a lot of people asking me about what's best to have, more grids or less grids. Well, I mean that all depends on the chart that you're trading and the trading range that you're trading within. And also, where do you expect it to go? Do you expect it to go all the way to the bottom and all the way to the top and back again? So what grids are? They're basically buy orders and sell orders. So these are all sell orders, these will all be buy orders, and then depending on the way the price goes, basically every time you go down you'll be buying, and then from this level you'll be selling, and so on and so on. So if I had $10,000 and I was going to put it into this trading bot, what I'm essentially doing is I'm spreading $10,000 amongst this entire range. Now, if I don't think that these areas are ever going to be used, if I don't think that that's ever going to be used, that's basically cutting off what looks to me maybe about a quarter of my entire investment. So that means that if I don't think that these grids are going to be used, why would I spread my investment that far down? That means that of my $10,000 investment, $2,500 are not going to be ever used to trade with. So it's almost completely pointless. I'm essentially hodling a quarter of my investment. If I want my entire investment to be used in the trading bot, then I need to appropriately spread my grids. So that's just an example. So also, when something's extremely volatile, do you really need to have 180 grids? I mean, this is massively volatile. Let's just measure it out just to see exactly what kind of range we're playing in, just from the price action there to here. Now, so that's a 50% range, okay? During that 50% range, then, do we really need to have what could be probably about 60 or 70 grids within that range? No, we don't, because this is an hourly chart. It's moving within a massive area, okay, within a few days. The grid space in here is 0.65? You wouldn't need that, okay? What I would do if I was to set this bot up now, there is a chance that it could come down here, so maybe it would be appropriate to have a grid all the way down here and a grid all the way up there. That's fine, but this is massively volatile. Even let's just measure this out from the top to the bottom. That's a 230% range. I don't need to have 180 grids there. If I expect this entire range to be filled and played, then I don't need to have so many grids. It's a very volatile range. 230%, in what looks to be a week. No, I would limit my grids. I would keep the same areas, but I would limit my grids. I would probably say I'd need half of those grids. We'll have 70 grids. Even 70 grids is still 1.69%. Maybe we'll even bring it down a little bit further. Maybe we'll go for 50 grids. At the end of the day, this is very volatile. Each of these are sell orders, buy orders, and sell orders. Are they going to be filled? Absolutely they are, because look at the state of this chart. It's moving all over the place. Now what I've done is I'll be spreading my $10,000 amongst the same range, but I'll be using less trades, but each trade that's being used would be for a higher amount. Now, if I wanted to, like I say at the beginning of this video, I did say that, do I think it's going to come back down here again? Let's just say I don't think it's going to. If I don't think it's going to come back down there again, why have the grid down there? Essentially cutting off 25% of my entire investment. If I move it here, then basically that has basically condensed my investment area to be traded within a certain range. So let's just say that this is the range I want to trade. Even if I wanted to trade this bot just for a short period of time, maybe for a week or two, do I think that this is the range that it's going to play within? And this again is just an example. I'm not saying that this is the perfect way to set this bot up. I'm just giving you an example about what grids are and how to use them appropriately to make the most out of it. The best way, like I've said, is to try and imagine what grids are. You're spreading your investment over that entire area. So if your investment is not going to be used by the bot, then it's essentially a hodl. You want this bot to trade this range. You want the whole range to be traded. You don't want a little bit of it to be traded. Otherwise, you wouldn't need to put down 10,000. You'd put down 50,000 or 25,000. If I was only going to use a little bit of this entire range, if that was going to be the range for the bot, then you don't need to spread your investment over such a large area. And again, when something's massively volatile, you also don't need to have loads and loads and loads of grids. Even now, let's just say this from here to the top, that's still 100% range, okay? 100% range in what would be a few days. So shall I spread this out even more? Shall I have less grids? I'll probably say I probably would have a few less grids on that. There's no need to have so many grids. So we've got 40 grids now in a quite a large range from which is essentially a 100% range. Now what we've done is we've limited the size of the amount of grids, so less trades, but still technically will be the same amount of profit being made, but less trades, which means less trading fees. And I know trading fees are minimal, and you can use my link obviously for 20% off your Binance fees, and you can use BNB to offset a further 25%. So, but at the same time, you still don't want to be making loads of trades if you can avoid it. Okay. So this would work perfectly well in my opinion. Now if it dropped out of range, then yeah, you'd be in trouble. So maybe you'd have a bit of a safety zone here. But what the point I'm trying to get across is, just because you're using more grids doesn't mean you're going to make more profit. You're essentially trying to narrow down what you think here is going to be a trading range, and you want the entire trading range to be played. And if it's not played, then like I say, it's not wasted money, it's just you're just hodling a portion of your investment and not allowing the bot to use it appropriately. Obviously, you've got to work out what the trading range would be, and this I'm just using this chart here just as an example because it came up. I'm not saying that this is the appropriate trading range. I'm just giving you an example, saying if I was confident that there was not going to be any chance that the price will come down to this level again, then why would I have a portion of my investment sitting there not ever being used? That's all I'm trying to say. I think there's a lot of misconception about the fact that you can use 180 grids and you must use as many grids as possible to get the most amount of profit. That's not the case. If we were to move this to the absolute extreme, so we have 20 grids. Okay, if this was on a 20 grid structure, you would still have less trades, but the volatility of this chart would be exactly the same. Each one of these grids would be 5%. So every time this chart moved 5%, a trade would be either bought or sold. So that wouldn't be any different I mean, there would be a subtle difference, but there wouldn't be really any difference in the profit that you would make at the end of the day, because the volatility is enormous. If we were to trade a chart which is basically very small, moving a trading range of 5% in a week, then it would be more appropriate to condense your grids to have a much narrower range. But when you're dealing with extremely volatile moves like this, you don't need loads of grids. It's appropriate to have areas to catch the entire movement, but it's not that appropriate to have lots and lots and lots of grids in there. So I mean, this is a bit of an extreme example, 20 grids. We'd probably move it up a little bit. I'd favour the 40 grid structure on this one. And again, we've got 40 grids in a 100% area. Every time it moves 2.5%, an order is placed, whether that's buying or selling, and the bot will still be working whether you're using 40 grids or 180 grids. Grids are there to help you, obviously. But depending on the volatility of the coin and the size of the movement, this one again was very extreme. This one was a 230% move from top to bottom. Then you spread your investment to capture every single part of that move. But do you need 180 grids? Not in this case, you don't. No. Anyway, I'll leave it with you there. Hopefully that's cleared some things up for everybody. Thanks for watching. Take it easy.